Good morning, traders. I'm Olgado, your market stats commentator at Global Prime Forex. Today, I want to make an announcement, and that is that I have come up, well, not me, thanks to El Noelio and Albert. These are two superstar coders or programmers that have, out of their goodwill, been contributing to the Discord community at the Global Prime for a number of months, and they've done an absolutely outstanding job. So if you come to my dedicated channel, Ivan's Insights, and you click on pin messages, you're going to be able to get your hands and download right off the gates these two indicators. So essentially, these are going to be identifying areas in the chart that are going to be creating higher highs and higher lows based on Fractal. And we got both the solution for Tradingview and also the solution for the MT4 platform. Okay, so if you don't want to get too sophisticated and just want to have an indicator that is going to be calling structures for you, this is your way of interpreting market directions. If combined with the SMT or the Smart Money Tracker, this is going to be very powerful, and let me demonstrate in a second now how this is going to be looking in the charts. Okay, so let me first delete the chart, and before I go through the analysis of number of markets, I want to show you the indicator. So the indicator is going to be this one shown on the first pane. Notice here that we got vertical lines both on the top side and on the downside. So these vertical lines are going to show either the market is creating a higher high or a lower low based on fractals. Okay, so it's going to essentially identify low fractals or high fractals, and it's going to be painted in green or in red depending on what side has control based on structures. Then it's followed by the SMT or the Smart Money Tracker, and then it's followed also by the Bollinger Band, which is going to be the number one indicator that I'm going to be using to call ranges in the market. Because why I'm saying that? Because these indicators, when combined, the fractal breakouts and the SMT are going to be very powerful as these kind of like bundle that we put together so that we can call directions, as long or conditional to the fact that you identify prior to that we are not stuck in a range. If we are stuck in a range, you might want to just ditch altogether these indicators, because these are not going to be relevant or are not going to be of much use if we are in a period of contraction or distribution in the market. Okay, so this is what it looks like in the trading view, and if you want me to show what it looks like in the MT4 platform, give me a second, because I think I got it right here. You go. So this is the MT4 platform, and it looks just like this. Okay, so you're gonna have the fractal breakouts in green, painted in green, and then in the next window you're going to have the SMT. So when combined, notice that and if you can obviously align these colors together, you're going to be able to call very, very good directional movements as they play out in different instruments. Okay, so let me give you a little bit of a taste of what it looks like. Okay, and let me just go through a number of markets in no particular order. So Euro US dollar, notice that as of late we've seen a very powerful move towards the upside, and here we got the first candle that was confirming that we were both in structurally wise a bullish territory, but also in the same time in momentum terms we got the bullish slope. So there was full alignment in it was an all green picture. Therefore that's the time that you can either consider buying off the bat, or you want to first wait for a retest of the 13 weighted moving average, which is what I consider a technical discount. Okay, notice that here many times got tested and rejected. Okay, as I was pointing out also in a recent Loom video that I made for clients. Okay, so as we go back, you will notice that we had also a turnaround towards the downside right here, and this time it didn't really make much ground before buyers took control, as I was pointing out right here. Okay, so let's just continue going back a little bit. Notice here that we got a turnaround and we had green colors in both indicators. Therefore, this gives us permission to consider long. So again, if you actually see that this is such an elongated bar, it's going to be way riskier to actually get engaged in this long exposure in euro. You might want to look for some type of retracement toward the 13 weighted moving average right here. Okay, notice that there were opportunities all along the way before the market turned around. Now as we continue moving lower, notice that as I said to you before, you have to identify what kind of context we're trading. If this is going to be a market, which to me is very evident that this was a market market range, because the flatlining of the Bollinger Band at a time that we had different rejections of highs and lows. So essentially, this is going to cause very erratic and trappy conditions. You want to be staying away from it. So bottom line, if you're able to identify and call the ranges, which I've already given you a number of tips as to how you can call ranges. You can go back to my videos, or I can provide even more reference, but call the ranges and let this bundle indicators show you the way. This is going to be very powerful. Okay, so let's just keep going further back. And notice that the next one comes here in the Euro US dollar. So we can select this as the candle that really gives us that final confirmation that the structure has been broken towards the upside and the momentum is also turning around. So then you got the 13-weighted moving average as a technical discount where you can engage, and many times over, notice that through this bullish phase, this is acting spectacularly well as a level where long inventory on the euro is being built. Okay, and eventually we go for a run that is worth almost 200 pips. All right. Now, as we continue going back, notice once again that the euro against the US dollar was going through a bearish phase right there. Again, a very elongated candle, so you might want to actually wait for the 13-weighted moving average to be tested, and that's where you get, by a country mile, by far the best risk reward. So, you know, you can place your stop around highs, midpoint, depending on how aggressive you want to be, and this indicator allows you to stay with the trend all the way until the breakout structure occurs right there. Okay, you might want to obviously take profits along the way, but the bottom line is that if you were to engage in this trend around the 13-weighted moving average, it goes for more than 100 pips in your favor. And the same repeats here. Notice that we got a turnaround in the structure plus momentum, and the 13-weighted moving average once again acts as that technical discount for you to engage. And right here, you go for more than 100 pips in favor. Okay, let's just keep going back a little bit more, so as to not leave any stone unturned, and really go through sufficient proof that this is going to be a fairly accurate system that you might want to obviously synthesize it, test it. Perhaps the fractal breakout is just the only addition that you want to have. Perhaps it's the bundle of both. You know, it depends on your trading style. But here, notice that we got once again the structure and the S&T aligning in favor right there in that candle. So a retest of the 13-weighted moving average could actually be potentially a good idea, and that's where we come to, and then we sell off of it. Okay, and let's just give you a couple more examples before I end this video, because I'm just noticing that I might just stick with euro. Really, I mean, there's no point in going through many instruments and make it a 20-minute long. So once again, here we got the bullish structure being broken, and the first test of the 13-weighted moving average doesn't really come until a bit higher, you know, a couple of days later. So you might want to engage right off the gate. So you want to wait for the 13-weighted moving average. It doesn't matter, because as long as we are not in a range and we are in a all green bullish phase, the 13-weighted moving average retest is going to create that buy side opportunity for you to potentially, if you are interested in adopting this type of strategy, building long inventory in this case in the euro. Okay, now last example, notice here how spectacular this run was. So essentially we got the euro US dollar turning bearish at that point right here. Notice that we got the last fractal low was in there, and we had finally acceptance beyond that. And what do you see? You see that the 13-weighted moving average gets retested at a discount. Why is it a discount? Because we are in bearish phase territory. So if we are in a market that is going to be dominated with sellers having the upper hand, and we come to the 13-weighted moving average, we are somehow going back to a level of either equilibrium or discount, and that's where you get the most bang for your buck. That's where you get the best risk reward prospects going forward. Okay, so I've gone all the way back to March, so I've gone for more than 3 months. Hopefully I've proven a point to you guys, and again, remember that if you want to upgrade your trading approach. If you want to consider accounting for structures because you haven't just yet, this is going to be an excellent indicator, and it's going to be available both in Tradingview but also in MT4. You can get your hands on this indicator by coming to the Discord room, visiting my dedicated channel, and you're gonna just have to click on pin messages, and here you can download these indicators. But remember that this is just a drop in the ocean. I have many more indicators that I've been able to come up with or work with other coders, and the ultimate purpose really is to help the community and to help you become a better equipped trader, really, so that you can hopefully pull more profits off the market, become an improved version of yourself. Okay, so that's all I wanted to share for today. Thanks for your time, and I'll see you again with more videos tomorrow. It's bye for me. Cheers.